Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Dave Mazza, Managing Director at Direxion, to discuss an ETF that gives you exposure to the Nasdaq-100 index, but with equal weight. Dave, it's great to see you as always. Welcome back to Trade Talks. And I want to get your thoughts first on the Nasdaq-100 and the market in general, having made a significant move off those June lows.
Yeah, that's right, Jill. Thanks for having me back. And what we've seen is really an impressive rally, really led by the Nasdaq, which has lifted the broader market since the June lows. Much of that, I think, came from some technical factors and short coverings. But at the end of the day, we saw much better than feared earnings releases. And now we're beginning to see commentary out of the Federal Reserve potentially heading into Jackson Hole that we're not going to just see a path of 75 basis point hikes from here on out.
Let's talk about the QQQE Direxion's Nasdaq-100 equal weighted index. Tell us about some of the features, how it's constructed.
Yeah, so it's really interesting. I think most people are familiar with the Nasdaq-100, and of course that's a terrific index for getting exposure, especially to some of the most innovative companies in the world. But it's actually market cap weighted, and there's nothing wrong with that. But one of the challenges with market cap weighting is that you're continually having exposure to the largest companies. So as we know that companies grow in size, you don't get as much influence as some of the smaller names. So of course, the largest company is going to have the biggest weight down to the smallest at the 100th, if you will. Equal weighting kind of rectifies that challenge as every company at its rebalance gets that same 1% weight. So it really kind of systematizes the ability to essentially sell high and buy low.
And how is the performance relative to just Nasdaq-100 exposure?
So what's interesting is sort of in this most recent rally, actually the large cap names have led. So the Nasdaq-100 has outperformed the equal weight. But if I look at the full year, so year to date, actually the equal weighted approach, QQQE, has outperformed because many of the larger cap companies, the mega caps, really were some of the worst hit in the market sell-off. So it can be time varying of which one outperforms or does not. But really the idea here with equal weighting is that you get much greater balance across the portfolio.
And to wrap up here, Dave, what kind of investor, where does this fit within one's portfolio?
Well, I think for someone interested in the Nasdaq 100 or the Nasdaq space broadly, it could be something that should be on their radar, or it could be a core holding, right? If someone's, again, not comfortable maybe taking on some of the risk that can come, especially in this market with the uncertainty that remains there, saying, hey, I want to be exposed to the Nasdaq, want to be exposed to the growth potential, but I want to do so in a more balanced way, an equal weighted approach might be right for them.
All right, Dave, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.